All right. Good evening, everyone. Can I please have a quick sound check? Let me know if you guys can hear me, if you guys can see the screen. I appreciate it. All right. Thank you so much, everyone. Okay, let me just change this. All right. Perfect. Good evening, everyone. I see a lot of familiar faces in here, but I also see a lot of new faces. So for those of you that are new, welcome. Tonight, we're going to be talking about exploiting earning season for max gains via futures. And it's actually simpler than you think. It's a lot simpler than trading stocks. For those of you that are new here, my name is Anka Metcalf. I am the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in the markets. I have been doing this professionally for, I would say, close to 30 years now, but as an independent trader focused on equities and futures for the last 20 years when I quit my job and dedicated my time to managing my money. I have 10 plus years experience in investment banking. I do run a swing trading service for stocks and ETFs since 2010. We have been around for a really long time. And I also run a futures trading room since 2017. This popped up as a surprise even for myself. This is something that I was doing on the side of swing trading and investing. And it became actually one of the most popular product with TradeOutLoud. It was insane since its inception. And it happened by accident. I was trading futures. I was on X. I was sharing some of my trades, and then I got a lot of messages on social media of like, "What do you do? Can you teach us how to do it?" Because it's actually simpler than day trading stocks. Now, don't get me wrong. I absolutely love trading stocks, and I do trade stocks. I haven't been very active in day trading stocks, but last week, you know what? I could not refuse the trades that were offered in the market, especially in Meta, and I had some other trades as well that had really great trading opportunities. And because the futures market was a little bit bland last week, I just hopped into some day trades that I also shared in the room. So there are times when, futures trading, and basically 99% of the time, futures trading is very active. But there is that, 1% when you have a little bit more downtime in the futures market. And I tend to look at stocks as well. So, I want to make my money work for me. We do offer, like I said, trading education for swing trading, day trading, and we're going to come up very, very soon with an investment course that is going to knock your socks off. It's going to be incredible. I am Columbia University educated into investing. It is where Warren Buffett dedicated a lot of his time teaching, and I'm going to share with you some of the most interesting facts that I have never shared with anybody before, because I have been mostly known for swing trading and day trading. But basically, this is how I started like 30 years ago. I specialize in high velocity trades. I do have a lot of experience trading because I have been in the market for a very, very long time. And I'm going to share with you guys what a velocity trade is today, when we're going to be sharing some charts. A velocity trade means that you have a very good risk to reward ratio to start off, and you're having the trade in the clear, meaning that you have a really great tradable void and you have the context that favors that move to happen. Because, for example, now you could have a really good trading setup from the technical standpoint, but on the other side, you still have the tariff war going on. And that, when you're getting that kind of divergency from all the chatter that is out there in the media, social media, etc., that tends to create a little bit more choppiness and also stagnant type of market environment. I'm also the designer of a proprietary trading system that is based on price support resistance. However, I tend to focus more on 8 layers of support resistance. Now, 99% of the traders just focus on supply and demand. That's fine. If it works for them, that's great. but they're missing 90% of the equation. Because if you focus on the 8 layers of price support resistance and you're focusing on every single technical aspect that you have on the technical chart, you're going to develop really good trading habits, healthy trading habits that are going to help you actually come up with really high velocity trades. And not only that, but high odds trades. Because the most important thing in trading, and especially in day trading, is not quantity, but it's the quality. Because when you're trading quantity in the futures market, you still have commissions, even though with some brokers you have less commissions. With other brokers, commissions are a little bit more substantial. But all in all is that you are going to lose money in the market, because the more you trade, the more you put on risk. So it's not necessarily like the more time you spend in front of the screen trading, the more you're going to make. That's not the case, especially in the futures market that has a certain rhythm, when you have periods of times when the market is moving a lot better than others. So I also have designed specific trigger times. These are incredibly accurate. They have been developed by myself. They are proprietary to TradeOutLoud. And I did share them with somebody on Wall Street. And I have to say, somebody from Goldman Sachs, one of my mentors that has helped me through the process transition from a new day trader to a really well-rounded day trader when I first began more than 20 years ago. So these specific time frames are not many, but they are lining up with the technical aspect and with the algorithmic system that you guys know is controlling the market. More than 87% of the market volume is algorithmic trading, and I'm embracing it. I absolutely love it, and I'm loving this time. We also trade with specific price zones. These are specific price zones that line up at technical levels, and there are 4 specific price levels where institutional traders leg in or leg out of trades. And also chart synchronicity and divergency. This is extremely important for the whole entire trading system, because at times you're going to see that not all indices are in sync. And when you don't have a complete synchronicity into the futures market, for example, the Dow needs to be on the same pace, trading the same pace with NASDAQ and with ES and with Russell. So for example, today, if you have been in the market, you probably have noticed that Russell was lagging in the morning. And as soon as, Russell completed its pullback, it was on a mission to go to a certain level. We were actually stalking a trade, a NASDAQ, and this is what we traded today. And we were stalking a trade based on Russell's activity. And when Russell rotated, bam, we hit NASDAQ because it was into a velocity type of setup. So let's move on. For those of you that want to learn more about TradeOutLoud and my work, what I do and what we offer, you can definitely visit our website. So the information that is provided today is for educational purpose only. It should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or instrument of any kind, because I'm pretty sure you guys know by now that trading involves a high level of risk and is not suitable for all investors or traders, because you can lose money. So before deciding to trade, you should carefully consider your objective, your personal objective, your personal risk tolerance, and your personal risk appetite. All right, so let's get going. Fast trades, awesome results. Typically, when I look at the market, I look for these velocity types of trades that are very active, especially into the first 6 weeks of earnings season. Now, as you guys know, we are in week 4 of earnings season, and this is one of the most dynamic weeks from the whole entire quarter. So how to use futures on indices like the S&P 500, NASDAQ, Dow Jones to bet on the overall market direction influenced by a series of earnings reports. And this is what we're going to be talking about today, because futures indices will have a massive reaction on specific stocks and on earnings reports. So we're going to discuss today about seasonality a little bit. We're going to talk about earnings season, what to expect earnings season. You guys know that you're expecting gaps, right, in earnings season, and the gaps are created. I can share this right here, right now. Gaps are created when the price closes at a certain price, and then the next day it opens above or below, and there's a gap that is produced in price. It doesn't apply to the futures market. Gaps in the futures market are totally different than the stock market. So this applies to the stock market. The gaps apply to the stock market. And based on the gap, whether it is a gap up or a gap down, and depending on, literally, there are 5 rules to the gap system, but they're very, very simple. I'm not going to talk more about gaps here because this is not a stock day trading course or a webinar. But you should know that, for example, if you have a gap up, let's say, we're going to have earnings from Visa tomorrow morning, and if Visa is going to gap up, right? And if it gaps up above resistance, then it's going to be a gap and go. So it would have a continuational pattern. If the price action is going to gap into resistance, for example, then you can expect a pullback or expect a base before a continuation higher. And the first 5 to 15 minutes are very important from the gap itself, from the stock that is gapping, because it needs to hold and it needs to establish that average to range within the first 15 minutes. So the first 15 minutes are critically important, because if they hold the gap up support from the first 15-minute candle, then it could be a gap and go, and bam, you have yourself a really good trade. Whether you're a trade, and this is a really great strategy, you can apply it in stocks, in the futures market, in anything that you're trading. So we're going to talk a little bit about futures. I'm going to keep it very brief about futures throughout the presentation, and how to create a game plan. Oops, there's a typo right there. And how to create a game plan for the second quarter of 2025 earnings season. How to determine entry, stops, and targets using technical analysis and some really, really simple indicators. And how to trade stocks versus futures, the minis, and of course, best time to execute these earnings trades. So we're going to hop right on board. I have literally a jam-packed webinar for you guys. First of all, earnings season. Earnings season is here, has started about 4 weeks ago, actually 3 weeks and 2 days ago. And it started with financials. As you guys know, JP Morgan, Goldman Sachs are the first ones, Bank of America are the first ones that are kicking off earnings season. And when you have the first earnings that come on board, that is basically the momentum for the whole entire market, because every investor out there is eagerly awaiting for the data to come out. So earnings season, as you already know, has already started. And what this means for us, it means more market moves. It means velocity moves. It means follow through, right? So it's so great when you have follow through. You have the return of volatility. You have bigger price swings. I mean, not that we don't have volatility now with the tariffs, right? You got bigger price swings, and this is what I like. You have, and that definitely means more money for the astute trader. Less time spent in the market, and definitely take advantage of institutional power moves that occur in the first hour of the New York trading session. You guys know that I'm really big into trading the power hour. Basically, this is the first hour from 9:30 to about 10:30. All right, so let's take a look in depth into earnings season right before we switch into futures, because if you guys are new to trading, it is very imperative that you marry stock trading with futures trading. And in fact, you're going to become a much better futures trader if you know how to trade stocks as well, and the other way around. So earnings season is the period of time during which a very large number of publicly traded companies release their quarterly earnings report. So first quarter ends March 30th. You have the second quarter that we have just begun right now, and this is going to wrap up on June 30th. You have the third quarter that ends end of September. You have the fourth quarter. You guys know it's the end of the year. So why earnings season is so important? Well, first of all, quarterly earnings report is one of the few times during the year when the company is required to report its progress, right? Analysts and investors, and of course, traders and the media await the reports to see how the progress is going. And it's all about the expectations, right? So when you're hearing the results, look at the expectations. Company can see a big move swing in either direction when the report comes out. And I'm pretty sure you've guys seen, we could go tonight through some of the stocks that have already reported earnings, for example, last night and throughout the day today, before the market and after the market. So to see the reaction and how that impacted the indices. So pay attention to what day the company reports earnings. So this is something that you have to do on your own. You have to have an earnings calendar. And also you need to know when these companies are set to schedule these reports. So you have to know exactly. And you don't have to know all the stocks, but you have to know when these big power players are going to report, right? Because you have big power players that are going to come out, for example, this week. And from the Dow, you have Visa that already reported earnings, or it's going to report earnings, I'm sorry. You have Caterpillar that is also going to report this week, right? So these are companies that you need to know when they're reporting, whether before the market open or after the market closes. And watch the correlation between the index that it belongs to and the progress, right? Because if it's going to gap down, for example, and it's going to have really poor earnings and estimates, then most probably that is going to affect the index. And I'm not talking about little stocks. I'm talking about big power players, you know, a power player like Boeing, also a power player like Caterpillar. These are really good, or Goldman Sachs, etc. So companies' earnings are released, like I said, before the market open or after the market closes, often causing a really substantial move in price in the underlying stock outside of regular trading hours. So you must know that these earnings are never coming in during the trading session. So the largest reaction typically occur when a company substantially exceeds or misses expectations. And as day traders, we really don't care whether we're trading long or short. So you have to get your game plan ready for longs and shorts. So having access to futures market allow traders to quickly react to the news and participate in the initial reaction to positive or negative news for the underlying stock. So for example, I'm going to give you some hints here and there, and we're going to look at some charts in a moment. But for example, when Apple and Microsoft are going to report, look that night at the futures market. And by looking at that night, I don't mean just looking at 6 o'clock when the market opens, meaning look at around 10 o'clock or so when there's a little bit more volume into the Asian session. So for example, you can capture really big moves from NASDAQ earnings reports when you have companies like Amazon, which is going to report this week, Google, Netflix, Apple, Meta. By the way, Netflix just made a new high. Meta, Boeing, etc., and create the framework. So you have to do a little bit of work. It's not really a big deal. You can find all this information on your broker's page. For example, Thinkorswim. I trade with Thinkorswim. I have earnings on that page. I have everything that I know. I know exactly when stocks are going to report, whether it's going to be in the morning or the afternoon. So you could also go, and this is one of the things that I really like. You could also go to Earnings Whisper. This is the site that I often use. And I go to this site and I have all the earnings for the week. They actually put out earnings for the whole entire month. If you want to jot them down on your agenda, your planner, just to be aware when on that day what you're going to be trading and watching. So for example, you know, you had Visa that reported tonight, right? So Visa reported tonight. And first of all, let's go to a Visa chart. So we're going to go Visa. Okay. So this is the chart that we're looking. This is with extended hours. This is how it closed. So I'm going to put here, you know, this cursor so you can see where the price action, how the price action has reacted. Okay, so this is where the high, for example, let's say 342.3. Okay, and then in the extended hours, the price action has popped higher. So when it closed at 342 and 30 cents. And after hours, it has hit a high, and we're going to move it right here. This is the new high, almost it's actually $350 right on the nose. And as you can see here, the stock actually gapped up right into resistance, right? So this is where it gapped up. Sorry, I moved that a bit. All right, so gapped up into resistance. And if you remember what I said earlier, I said that if the stock gaps up into resistance, so tomorrow you're going to see the price action probably is going to open somewhere, I don't know, 340. I have no idea where it's going to open. But you're going to see that the price action is going to have a really tough time right here into resistance. And the first 15 minutes to 30 minutes are going to be very important in watching the low of that period of time within the first 15 minutes or the first 30 minutes. And if the first 15 minutes and 30 minutes are holding, then you could actually even trade the stock as is, and you could narrow it down, let's say, for example, on a 15 minute. So you could go on a 15-minute chart if you're, let's say, if you're a day trader, and don't pay attention to the whatever is happening, you know, right now. Let's say at 7 o'clock, you can see the price action is, you know, it's pulling back a little bit. The most important thing is how it will open tomorrow at 9:30, because it could meander around here and, you know, in the pre-market, because you can see here that it's trading in pre-market. So you know, it's trading at 7 o'clock, 8 o'clock or so, very thin, but sometimes it's trading. You have stocks that are a little bit more active at 6 o'clock or 7 o'clock in the morning. So this one typically, you know, tends to wake up more into the 8 o'clock to 8:30. So watch it around 8 o'clock or 8:30, and then watch it at the open, because the open is what truly matters. That is when the volume is kicking in. All right, so we can see here that it had really nice earnings and pulled back a little bit in the overnight. So watch it tomorrow. Now, because we talked about this, who do you think is going to impact? And this is a direct question for those of you guys that are here. Who do you think, which index do you think is going to impact this stock's earnings? Okay. All right, you guys, can you guys share some ideas? Can you guys share some ideas? Okay. All right. Okay. Perfect. Perfect, everybody. So it's the Dow, right? So what we're going to be doing is we're going to go to the Dow. The correct answer is the Dow. So it is part of the Dow. So what we're going to be doing is we're going to actually plot and see how it could respond to the Dow, because it's a really big part. And then we're going to check the calendar again and see if there are any major players that are going to report within the Dow. Okay. All right, so let's plot it out. So we have the Dow here. You can see that we had a little bit of progression. We do have resistance right here. And we also have a batch of resistance over here, right? So we have two batches of resistance. And you can see here that the price action had a little bit of hard time progressing higher because of these resistance areas, first of all, from the pivot high and from the pivot low right here. So basically, we're having a minor resistance zone. But if we get over this resistance, we could progress higher into the 41,500 at least. And as you also probably have noticed here, we're also trading into resistance area, which is totally psychological, the 41,000, which is a whole number zone. All right. So what do we plot for the next day? First of all, I'm paying very close attention to whatever the high was in today's session, right? So I'm planning for tomorrow's session. I'm not going to plan on trading overnight, but I'm planning for tomorrow's session. So I can see here that the high is 40,000, let's say 40,775. So that means that if the price action is going to knock this 775 out tomorrow or in the overnight, and if there is going to be a strong maintenance above the gap price, so above the close from today from Visa, we could potentially expect a move higher into this prior resistance area. So that's 41,000. That's going to be 41,000. This is going to be the transition. So 775 bullish above, all the way to a target of 41,000, and then into another target, into the prior pivot high, into the 140. We knock this out, we're going to move even higher, right? So we're going to move into a target of 500. Okay, does that make sense, everybody? All right. All right, and this is a quick example. Now we're going to go back to our calendar, and we're going to try to see, are there any companies that are going to impact the Dow tomorrow morning, right? So we're looking through the calendar, we're looking through the list, and we saw Caterpillar, right? So Caterpillar is, again, a very big component. We're going to go back here, a very big component of of the Dow. Okay, so because it is a very big component of the Dow, we're going to pay very close attention to it. As you can see, the stock is downtrending, right? It was downtrending, but it already formed a low. Okay, so this is pretty good. And it also formed a higher low. Okay, so this is very, very good. It already filled the gap here. And as you can see, it has a little bit of room to progress higher into the next resistance. Bam. Okay, so we're going to watch very closely because these are going to be the major levels that we're going to be focused on. First of all, it's going to be the 318.65, which is going to be the minor resistance area from this pivot low from back in March 4th. And if the price action is going to try to gap up above this price, this is going to give power to the Dow. So therefore, you have some strength from coming from Visa, and you have some strength coming from Caterpillar. Okay, so this is the bullish scenario. So now what is certain for us is that Visa reported earnings and the earnings were good. One thing that we don't know is Caterpillar, right? So what happens if Caterpillar is going to have a gap down? What's that going to mean for us? Well, basically what's going to mean is that it's going to be like one cancels the other. So therefore, you're going to see that we're going to have a sideways day. So if you have one good, one bad, that is going like to flat it out, and you're most likely going to see a range bound Dow tomorrow. Okay, does that make sense, team? So you have your game plan for tomorrow. It's already set. All right, so let's move on. We still have tons of materials to share. All right, so this is the earnings reporting by week. This is for the stock market, and we are here right now. So 39% of the market is going to report this week. This is the most massive, and by the way, this is week 3. We started very early. That's why I said week 4, but basically this especially is week 3, because early means that only JP Morgan, Bank of America reported, Wells Fargo and Citi. Those are the ones that report generally on Friday, right? So it's the last day of the week, and this is early reporting. That's why it doesn't have week 1, right? So this is week 1, 2, and let's say this is week 3. I call it week 4. It doesn't matter. This is where we are right now. And as you can see, next week, we still have a really big, massive impact from earnings. So it's so important to get ready for these types of moves because this is easy money, okay? And right after that, well, week 5 all the way through week 8, that's a different breed. You have to have a different style and tactic of trading in order to trade this. Very few traders make money from week 5 to week 8 because this is where you have to focus more on relative weakness, relative strength, technical levels, context, CPI numbers, PPI numbers, external factors. This is the time when most of the trading is news related. I'm not saying that that now we have 100% fundamental market, but you are going to have a fundamental move outside of just technical or just outside of tariffs, right? Okay. So you're getting more of fundamental blend in the market than anything else. This is going to be a news-driven market. You have to know how to trade the news and how to trade because each and every single day and week is going to be different. And by week 8, this is going to be one of the most difficult weeks to trade. Only very few traders are successful right here. All right, so let me share some past data with you guys and to see how the market reacts. Netflix, this is Netflix reported earnings that had bad earnings here. And as you can see, you have to follow through to the downside. It was very easy peasy because NASDAQ was short as well. You could have shorted. And remember what I was saying in the stock market that you need to pay attention to the first 15-minute range. This is the first 15-minute candle, high low. First 15-minute candle, high low. So whatever I'm presenting to you guys today, it's freaking easy. Okay, so it's freaking easy. And if you're used to, watching a ton of indicators and a ton of patterns, you don't have to do it here. Okay, so you're going to pay attention to a 15-minute high low, high low. If it's a bearish bias, you shorted you shorted below the 15-minute low, you shorted below the 15-minute low. You traded in sync, Perfect. So you have Netflix lower, you're going to pair it with NASDAQ. You're going to, and that is going to push NASDAQ lower. So Netflix pushing NASDAQ lower here. For example, IBM, this is the first, this is the 5-minute. In this case, because you had more resistance to price action, you can see here that this is the first 15-minute, right? You can see first 5-minute, I'm sorry. Because you don't see any kind of push above the 5-minute bar, right? You can see that it has pulled back. So we had an inside candle pull back. This is called a calibration, recalibration of price action. Then you get a 5-minute buy setup. So it's, you have a combination. You have a 5-minute buy setup. You know how to apply it. Bam, you're all set. Here as well, you're pairing it with what? IBM is part of what? What team? It's okay, it's part of the Dow. Thanks so much. All right, so it's part of the Dow. So you're going to pair it with the Dow. IBM reports, bam, Dow is what you're going to be trading. So don't be fixated. A lot of traders are fixated on trading the S&P. They're like brainwashed. There's like S&P. No, you trade whatever is in play that day, and you trade whatever offers you the easiest setup, the fastest setup, and the instant gratification type of setup. And here you have the 5-minute setup as well. And here's the profit into the power hour. This is what you're focused on. The rest, I don't even care. So let's talk about the economic drivers. The economic drivers are present in the market, especially in the latter half of earnings season. So economic indicators are the main driver of price action in the pre-market trading session. And of course, the majority of economic data, you guys know, it's issued around 8:30 a.m. So it's an hour before the New York open. So market reaction to the data can cause substantial price moves and set the trading tone for the day, right? Especially when you're getting big data out, high impact data. So you're not going to lose, you're going to look at, you know, some low impact data. No, you're looking at big impact data. So I don't trade the news. But I do trade the reaction to the news. So I let the price action calibrate. I could care less what happens at 8:30. I could care less what happens at 9 o'clock. All I care about is how the market is opening, period. Okay. And I'm looking at those 5-minute candles, 15-minute candles. And again, you don't need to interpret the numbers. One of the biggest things is that traders don't, oh, but I don't know, you know, if we have a number that is above the forecast and it's in line with the estimate, I mean, what does that mean for the market? Who cares? The price action is going to tell you what you need to do. Just act like an algo. Do you think algos, you know, when they trigger a price, when they're getting into a setup, they're getting into a trade, do you think they care? They ask, you know, they ask the other algo across the room, say, hey, what is the CPI data telling you? Okay, no, they're trading based on technicals. So here's this. Facebook, Amazon, Netflix, and Google, name the FANG stocks, bring a great potential to your portfolio, but are very, very expensive to trade. And as you guys know, we have the Max 7, right? And let me share with you guys. Here's the Max 7. You have NVIDIA, Amazon, Google, Meta, Apple, Microsoft, and Tesla. And when these guys right here start reporting, you know, things get really, really hot into the market. So NASDAQ 100 is a great way to access top tech market opportunities. You get capital efficiency of futures that can translate to significant savings, because let's face it, maybe, I don't know, you can't trade Meta. Meta is a $549 stock. Maybe you can't trade Apple, it's 210. Maybe you can't trade Microsoft. Microsoft is 394 a share. Tesla, $288 a share. You can see here, nothing is below $90, right? All these Max 7 are really, really pricey. So there is a better way to do that. You can trade them through the Max 7, right? You can trade them through the FANGs. Remember, a few years ago, it was the FANG. Now we have the Max 7, right? So take advantage of the 24-hour market to access the information that the market is providing you and see what the rhythm is into the futures market. So here are the Max 7 stocks that I just shared with you. Very few traders know that you can actually trade these stocks via futures and take full advantage of big price swings. So exactly what I have shared with you with Visa, guess what? We're going to have We have Microsoft and Meta reporting tomorrow after the close. So that's the reason why I decided to do this webinar today, so you could actually take action on Wednesday. So on Wednesday night, guess what? Tomorrow night, watch the market, because if Microsoft and Meta are going to exceed, and the reason why I am bullish in my thought right now, they could actually miss and they could actually be lower. The reason why I'm presenting the bullish case is because the market is bullish. It doesn't give you any reasons to short right now. And I get a lot of questions. Can I short this? Can I short that? You can do whatever you want, but I'm not going to do it. Okay. Because the market is trying to hold, as you can see from the structure, and you probably saw from the structure, because we already have discussed about this. We already have what? We already have a low in, and we already have a higher low in. Do you know what this is? This is a partial change in the trend. Partial change in the trend. So what this means is that we're getting trajectory for higher. What a confirmed change in the trend would be, and I'm going to share it with you right now, would be like this. If the market is going to pull back, it could be to this trend line, it could be a little bit steeper, but we will have another higher low. And when we will have another higher low, we would have a confirmation for, hold on. Okay, we would have a confirmation. This is the second higher low. And in this case, if we pull back, it's not necessarily to pull back. We could always base into those highs. So we could have a consolidation for a few days, and that would be even perfect. But when we get a pullback, that is going to be the ultimate confirmation that the market has changed its structure and it's back into the uptrend, and especially on the daily chart. Because if you're looking at the market from a different perspective, from a higher time frame perspective, let's say on the weekly, you don't have a downtrend, right? You just have a big move to the upside. You have a double bottom, a double top formation, and you just have a pullback. You do not have a downtrend onto the weekly. More so on the monthly, you have 1, 2, 3 bar pullback. It's very rare. If you look to the left-hand side of the chart, it's very rare for the market, or for a stock for that matter, to have a 3 bar pullback on the monthly. And then boom, it rotates again. So be very careful. Don't get caught to the short side unless you see the shorting clues. And by the way, do you guys know what day is today? Today's the 29th. Tomorrow's the 30th. 30th, last day of the month. Usually chop. You probably have seen the daily activity into the futures market, into the stock market. You could look at the Qs, the SPYs, whatever. But you have seen that the price action has been a little bit shallower. Notice that the volume went down a little bit. You know what that is? That is a calibration in the market. It's a balancing. So they're balancing their positions. You have these pension funds, they're balancing their positions. You have hedge funds, they're balancing their positions. So today, tomorrow, and yesterday, this is what it was all about. That's why you're not seeing follow through. That's why you're not seeing pullback, right? You're seeing a compression in price. So bottom line is that tomorrow's the 30th. And what an exciting day, May 1st. May 1st, we get brand new candles, right? We get brand new candles. We're going to wrap up this candle in 2 days, in basically tomorrow night, right? So guess what? If the price action is going to be constructive, and currently we're trading at 40,663, right? Throughout the month of May, if we take out the 42,836, we are going ballistic. You have got to go to the bank, take a second mortgage, and go long, because this is going to be the opportunity of your lifetime. Look at the bottoming tail. Look at the location. Look at the last time when we had the pullback into the 50 SMA. Look at the last time when we had the pullback into the 50 SMA. This is the pandemic. Okay, this is October 2022. Remember, 2022 was pull back here, massive opportunity here, base breakout. This is where we are. This is that moment in time. You're not going to have it every time, right? So whether you're a day trader, swing trader, or investor, you have to buy. right? You have to buy when you're getting above this level. I actually have added to a lot of my investments in this area right here. Okay, so in the market in general. All right, let's get back on track. So all you have to do is sync in your stocks with your index, right? So when you're looking, I have here for you guys, let's say the Dow Jones, and these are the stocks under Dow Jones. This is the S&P 500. You have 500 stocks under the S&P. You have NASDAQ, you have the power players, and you have other 100 stocks under NASDAQ. You have Russell, and you have Russell right here, Russell 2000. You have 2,000 stocks right here. Okay, so whenever a bigger component of these indices will report, that's when you're going to be playing with the Russell or the Dow or NASDAQ or yes. And this is very simple. So for example, you're going to sync YM, right, to your YM stock list. So for example, tonight we had Visa, right? Tomorrow we have Caterpillar. Okay, so you have Caterpillar. So you look through the list right here and you can see, what companies you have. You had Merck that reported earnings as well. By the way, Pfizer and Pfizer, that's why we had the strength today in the Dow, because we had Pfizer and Merck report really good earnings. Oh, and tomorrow we have Qualcomm as well. Let's not forget we have Qualcomm as well. This is how the market closed today. You can see fairly green right here. So those of you that are, bearish, it's not that bearish if you look at the structure, if you know how to look at the structure. So here's a quick checklist for you guys. First of all, you have to check the earnings, right? We're going to recap a little bit. So what do you have to do? Check the earnings calendar. Not a big deal. It's all visual, right? You check the stocks, whether they're reporting before the market or after the market, and historical time to release the report. And I have to do a little bit of digging. I'm not going to give you all the information because you need to do the work. So when you do the work, you remember how to do it. If I give you everything, right now on a silver platter, you may remember or not. But if I give you a little bit of homework, you're going to try to investigate it further a little bit, and you're going to find out that you're going to win at the end. Trace your levels, then plan or trade the same way that I have traced my levels. You saw what I did on the chart. And again, trade and watch NASDAQ if you have NASDAQ stocks that are going to report. So if we would have the webinar, let's say tomorrow night, we would be watching Microsoft, Meta, and Qualcomm, right, earnings. And based on their earnings, we would have a game plan for the open tomorrow, right? So in this case, do the work. Tomorrow night, Microsoft, Meta, Qualcomm, pull the charts up, trace your levels, go down to NASDAQ and place your levels right there. Look for a setup. You could actually have some pretty interesting setups that are going to be developing overnight as well. So you could catch an early bird right there. And of course, watch the Dow. If the Dow stocks are reporting in general, if you're happy financials that are reporting, watch the Dow and also watch the S&P. Now, what are the best times to execute trades? Before the market opens, after the market closes. When is the best time to execute the trades? Do you guys know? Trick question. Okay, trick question. Okay, when do you think? When do you guys think? Wait for the open. Wait for the open. Because the open is bringing more volatility from the New York trading session, right? You can see the volume that is coming into the New York trading session. And look at the volume in the Asian session. It's almost like non-existent. And did you look at the volume at the London session? It's also a little bit higher, but it's like crappy, right? So how to prepare? You need to know when certain stocks of interest report and have a really good understanding of prior earnings behavior of the correlated stocks. So I typically look 2 to 3 quarters behind, and I look it up on the technical chart and say, okay, when it reported in January, how did the stock perform? When it reported, let's say in October of 2024, how did it perform? When it reported, let's say in July of 2024, how did it perform? So I go 2 to 3, even 4 earnings seasons behind and check it out. Is it hard to do it? Is it hard? I know you're going to ask, is it hard to do? All right. So what I do is I go to the weekly. You see these vertical lines. You could set them up with any chart right? And these are the earnings reports. So it's very easy for me to assess. So for a stock like NVIDIA, I see that when it reported in February, the price went down. When it reported in November, it was sideways. When it reported in August, it was down. When it reported in June, it was up. When it reported let's say when it reported in February, it was up. So you're going to see here up, 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 and then it started to have some divergence in price, right? So you kind of have a feel, an idea of how the price, and plus there are rumors, right? And there are analyst estimates, and you could also go by that. So it's very interesting. Let me share with you some more charts in here. Here is Netflix. Netflix reported earnings. The market capitalized on the move. NASDAQ, for example, you can see here Netflix down, another time NASDAQ down. So it's fairly simple. Here we had earnings from Google, Amazon, Microsoft, all three at the same time. These are hourly charts. And this is the way I've displayed my charts. And what do you think I did? So after the announcement, we had Google up, Amazon up, Microsoft up. Look at the beautiful base here in NASDAQ. Of course, I'm going to buy it, right? I'm going to buy it overnight. And when I wake up, I'm already up massive, hundreds of points. This is a velocity move, right? This is, take a picture of this. This is a velocity move that has continuation and literally is giving you 100 points or more in the move. All right, let's check these charts up. Here we have Walmart, here we have Apple, the same day, so don't be fixated on trading the S&P or trading this and that. Correlate, because you're going to have the upper edge. You were present at this webinar. You owe it to yourself to trade the right way, the institutional way. So you can see here that Walmart had earnings, it moved up, and of course, why it moved up. You can see here that Apple, bad earnings, NASDAQ, down. So you can have, not once in the trading room, we had NASDAQ long and YM short, or the other way around. We had the Dow long and NASDAQ short, and they both worked. And they were like, how did you know? It's like, I have the crystal ball, right? I mean, this is all you need to know. Okay, so how's this presentation so far, guys? How's this presentation so far? Learned something new? Awesome. Okay, good. Is it complicated? Is it complicated? It's not. It's not complicated. You guys are going to rock it. Danny, you guys are going to rock it. Okay? You guys are going to rock it. It's not rocket science. Okay? You got this. You've got this. Okay? All right. So how to determine the ESTR? What is the ESTR? Okay, Charles, go ahead. You have a question? Type it in. I'm going to start talking about this. And we are going to answer your question. Of course, don't worry. I can answer your question at the end of the presentation. We just have a few more slides. So how to determine the ESTR? You guys know what that is? Entry, stop, target, based on technical analysis. Okay, what to look for? Number one, evaluate the trend. A lot of times traders are having difficulty identifying the right trend because they don't know on which time frame to go to evaluate that trend. So the number one thing that you need to do is do yourself a favor and zoom out. I know you're a day trader. You may love to live on the 1 minute chart or the 2 minute chart, but zoom out. Go to the daily. Go to the daily. And if you see a low and a higher low, the way you see it right here. Oops, I closed the chat box. Okay, so the way you see it right here, let's go to, I don't know, we've done a lot of NASDAQ work here or the Dow work. So you have the low and you have a higher low, right? Whenever you see this, like, I'm not going short, okay? I'm not going short. Okay, so this is what you need to do. All right, so find out the trend. And if you have a low and a higher low, stay long. Do yourself a favor, stay long, especially if the current open at the New York trading session, let's say 9:30, is taking out the prior day's high. If it's taking out the prior day high, shorting is not even going to be an option. Throw it out the window. If it takes out the prior day low, oops, I got to take a second look because that may be a short. Okay, that is the only time when you would go against the trend. Evaluate your support resistance areas, pivot highs, pivot lows, prior pivot highs, prior pivot lows, right? Everything that you have on a technical chart, where the moving averages land, right? Because those are dynamic resistance or dynamic support zones. Time frames need to be in sync. So if you're seeing that the overnight momentum was green, right? You need to see the 1 hour that has green bars, the 15-minute that has green bars, the 5-minute that has green bars. But if you're having a sell on the 1 hour and a buy on a 5, who do you think is going to win? Who do you think is going to win? The 1 hour, because it's a higher time frame. The higher time frames always win because the higher time frames are always dictating the move, not the smaller time frames. Okay. Charles is asking, do you still wait for the report to be released? Then you go long if the report is good. You have to make sure, okay, that you wait for the report to come out because you don't know whether it's going to be good or bad. So you have to wait for the report. After the report is out, you plot it out, and then you look at the index that it belongs to. So if you have JP Morgan that reported earnings, you're going to be looking at the Dow and ES. Most likely, I'm going to look at the Dow because it's going to impact more the Dow than ES. ES has 500 stocks under it, and the Dow only 30. So it's going to be a big power player in the Dow more than in ES. Of course, it's going to affect ES as well, but it's going to affect more the Dow. So report out, plot your levels, go to your index, plot your levels there, and then do exactly what I said about the bars. Okay. So you have plenty of time. You have absolutely plenty of time. Wake up a little bit earlier, stay, be in front of the computer around 8 o'clock. Watch the earnings come out. Watch CNBC. Watch the analysts. Okay. And then while you're watching TV and you're looking at the stock, release the earnings. It's an experience that you need to have. All the great traders that I know watch their earnings in stocks. I watch them all the time. I watch the earnings all the time. If this is your livelihood, if this is your job, if this is your career, if this is your means of income, you got to put in the work. Okay. All right. So time frames need to be in sync, and then you plot your entry, your stop, your target, and your risk. You're not going to get into a trade without having CNBC. I watch CNBC. Okay. So the entry and the stop is based on a strategy that you love and you know that works for you, whether it's a buy sit up or a base breakout or whatever the strategy may be. So decide on your entry, decide on your stop, decide on your target and your risk before you get into a trade. Because in this market context where you have so many news, so many chatters, so many things that are external from the market, the volatility is going to be high. And you're going to see that the distances between the entries and the stops are really wide. And if you have a certain account size, and if you say, I'm going to trade with a standard one contract, you're going to get burned. Okay. I had to turn on the light here. It's getting a little bit dark right now. Okay. So you have to make sure that you evaluate the entry and the stop, position size. This is something that, all the stock traders know, but futures traders don't do. 99% of the futures traders don't position size and trade with a standard size lot. And they blow up accounts left and right. And this is the reason why they do it. Try to determine the entry based on the chart pattern, the time frame that you're trading, right? So, for example, if you're sticking to, let's say, a 2-minute time frame, have realistic targets. Don't base your decisions, especially in this kind of market environment, and say, I'm going to go for 3 hours in this trade because this is how I trade. You have to be really, really, really understanding, and you have to be really on point with your trading, because if you're hopeful and trade on hope that the price is going to go 3 hours for you, and place your entry, place your stop, and go for a walk and then come back and say, oh my god, I stopped out, it's not a surprise. Don't be complacent. This is not a trending market. This is a really crazy badass market. Okay, so you got to make sure that you have very realistic targets and set your targets based on the time frame that you're trading. Very realistic. Always place hard stops, because with this volatility, like I said, you don't know what's going to happen. And in a trending market, I don't even I don't even put a hard stop in. Because I'm in front of the computer, I don't need to. My mouse is like a millimeter away from my hand. I don't need to put a hard stop. I'm not going to take a bathroom break because I only trade for an hour every single day. I'm not going to go eat. I'm not going to go answer phones. I'm not going to go anywhere. I'm sitting here in front of the chair for an hour. That's my job every single day. All right, Monday through Friday. And then you have to wait for the trigger. I only place limit orders. Okay, so I never enter on impulse like, oh, I got to buy now. No. So I put limit orders in. And of course, you have to make sure that after you're triggered in the trade, you have a trailing method. So you have to be prepared and know exactly how you plan to trail the trade. And past price action is going to be a perfect indication on how you will be trailing that trade. Whether you're going to scale out or you're going to keep the whole entire position, it's up to you. Knowing all this is going to give you peace of mind. So it's going to be very simple for you to trade. And these are some very simple hacks that if you learn how to do, it will make your life super easy. So some advantages to trading futures, right? Because we talked about the stock market. Some stocks are very pricey. You need to have a really big account. And I mean, in order to make a living, a good size amount would be around $150,000 to $200,000 would be considered like a small account if you're trading stocks. Because if you have stocks that are $500 per share, you're not going to make income with 100 shares, but you can make income, you can generate income trading futures. So you don't need a big account, but you need some money in your account. The biggest advantage is that you have a lot of prop companies that are funding, and you have, lower commissions. You have tax advantages. You have simplified reporting at the end of the year, 1099B, 60/40 rule. You can search more on that, and you can ask your accountant about that. You can take on a short position with these, and you have really good volume. So analyzing overnight price action, going into the newer trading session is also very important, because when you have earnings or when you have some really good news that is coming out, you can actually catch a trade earlier, and you can catch a trade in the overnight session. And the overnight price action is going to show you the key levels where you have your support, where it wants to bounce, or whether it wants to pull back to. It's going to show you the ranges. It's going to show you the direction and the trend, right? And it's very easy to evaluate the trend, even if you don't know how to count higher highs and higher low, which is fairly simple. If you use a few moving averages, right? I don't know. I use the 20 moving average. Let's say you just want to use one. Let's say you just want to use the 20 SMA, right? You could have that 20 SMA serve you as a trend line. As long as the price action is trading above the 20 SMA, you're going to be long. When it's going to start crashing below the 20 SMA, you could start contemplating and evaluate whether it's going to be a short or just a pullback. So look for pullback buys or sells in the zones or breakouts, whatever your preferred strategy is. Also map out trades associated with risk and, of course, targets. Now, here's my advice. Nobody has a crystal ball. Nobody really knows what's going to happen in the market. What seems certain at one moment can change in a blink of an eye, especially with its tariff talks that are going on. You have a talking head on TV, bam, the market sells off. You have, and then the market is just trying to grind and catch up a little bit back into the highs. And then you have a talking head and boom, the market shoots up. So our job is literally to find the low risk setups and manage it. Because sometimes when you're getting these news announcements, these tariffs chatters that are coming out via social media or TV or whatever it is, you're going to have really wide candles. So we have been going through a period of time where I saw NASDAQ almost 200 points on a 1 5-minute candle. I saw the Dow with a 300 plus point candle on the 5-minute. So you cannot trade that. You have to wait. Even if position size, if you have a bigger account, well, you're going to be trading with very less, or even impossible to trade, impossible for you to take a trade. So trading is a very serious business, hardest thing that you ever do, but it's simple at the same time if you have the right tools. And it's not a hobby, it's not entertainment, but it's a freaking lifestyle. You do not learn, and you will never learn how to trade from a DVD or for a book. You need to see and sit with someone, besides someone that has been trading for a long time, that has a track record. I don't care who that person is. It may be me, may not be me, who cares? Just look for a track record, look for some consistency, and look for a style. I mean, when I started trading, I could care less what style I was learning as long as it will make me money. I didn't care about the style. Oh, it's not my style because, I don't like trading on the 2-minute. I like trading on the tick chart. Well, here's the thing, news flash, the tick chart is never going to provide you an income because it's so fast paced. And other than that, it's not going to make you money because the most that you're going to make is 1 hour or less than 1 hour. And if you're on a losing streak, you're done. It's going to be very hard for you to come back and build what you lost. You really need a mentor that can be there for you and ask questions. There are a lot of questions that came here in the trading room. You need to have somebody that you're going to ask questions to and somebody that's going to be very honest with the answers. I had that. I had a mentor at any time. I had a question. I asked my mentor, and it was very important because there is no stupid question when it comes to your money. When you take a trade, think who you are trading with or who you are trading against. Because, there are traders that are health thanks, Dennis. There are traders out there that see the market, let's say, go up, 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 and they go like, oh, it's too high. I gotta short it. I mean, the market is being institutionally bought with hundreds and thousands and millions of contracts. And you're going to short it with one contract. Think about it, right? Isn't it silly? It requires dedication, patience, and effort, but I promise you it is fully worth it. It's not a get-rich-quick scheme because it's going to take time. And the more time you spend in the market, the better you will become. It's just like wine, okay? The older it is, the better it tastes. So I'm going to invite you guys. I have 2 offers. Okay, one, I did mention it in the invite for tonight's presentation, and we have literally a full house tonight. And the first invitation comes to my course, which we are opening the doors tonight. It is the Power Income Futures Trading course. It is an institutional grade trading system. It is a literally trade stress-free system. And Sanjay, I'm going to answer your question in just a second. You're going to be taught how to determine the institutional levels. You're going to learn how to do it. I'm going to give you everything you need to know. You're going to learn precise buy and sell zones by institutions. So when institutions are legging in, so you're going to win more than you lose. And I'm going to show you my stats. You're going to learn management and risk management. You're going to learn high odds patterns and setups, reversal times, trigger times, technical analysis. You won't need another book ever again. How and where to play stops so you don't get stopped out as often. You're going to learn about trading psychology. That plays a very important part in trading, but it's not everything from trading. Because if you know how to trade, this trading psychology part is not going to be like the fear of loss, right? You're not going to have the fear of loss anymore. Okay, so your brain is going to be rewired to success, and your brain is going to be wired because of the strategy. Okay, and we're going to put the puzzle together for you, and we're going to learn together how to do everything from A to Z into the market, from the setup, everything. So bottom line, if you're too broke to invest, and this is actually what my mentor taught me. He said, if you're too broke to invest in yourself, get used to staying that way. Okay, so you have to make the effort. We provide all the right tools that you can use to fast track your trading. We provide you the education, we provide you the live assistant 100% trading, guided trading that we do in the trading room. That's very easy to follow. You have, and by the way, few traders know that if you need to reach consistency, you need to have great education and a support system, right? Then that's critical. So you have to think right now, what kind of trader are you? Are you a welfare trader, or are you a millionaire mindset trader? Because the millionaire mindset trader is thinking about investing in a skill that will provide success for years to come. We have so many traders in the trading room that have quit their jobs. If you come into a trading room, you can actually talk to our traders. They quit their job and they're trading full time. This is my biggest reward. So invest in yourself to achieve the best results from the markets that the markets have to offer. We're going to have massive trading opportunities. The market is literally offering us a wealth of opportunities. Okay, so bottom line, if you break it down, this is about $16 a day for a year investment. If you break it down, okay, we have tons of reviews. You can actually talk to all these people in the trading room and more. So the power rank, of course, is for you if you're losing money in the market, if you're tired of losing money in the market, if you're a break-even trader, and if you're a P&L, if you're having a hard time trading, and if your P&L is red in April and you blame it on the tariffs, oh my God, April was our best month. March was a fantastic month. So we had such great opportunities into the market that it's ridiculous. If you don't have a system and you don't have a process that eliminates emotions, if you were lacking confidence in trading, if you need a hand-holding system, learn as you earn. Okay, develop trading habits. This is, wow, my phone is going crazy. This is for you. We trade an institutional grade trading system where we teach you everything from A to Z. And if you want to generate, and sorry, that's a typo right there in 25, 6 to 7 figure income, this is the place for you. Don't procrastinate, because procrastination is the assassination of the motivation that will stop you from reaching your destination. So we do have the Power Income course for you. Again, you're going to find out a lot more. I'm going to share the information with you here. Okay. And here it is. Okay. If you're interested about the course, it is a 90-day masterclass, and it's going to come with some changes. It's going to be in June. So let me share with you the date. It starts June 23rd. It's a 90-day course, because in order to change your habits, you need a minimum of 2 months to spend in the market. And if I'm here to help you for 3 months, then you're way on course. Okay. So think about this. how much money did you lose last year? Okay, how much money did you lose last year? What is your account telling you about trading? Are you a successful trader, or are you a break-even trader? Are you a trader that struggles? Because if you are, and if you're doing the same thing over and over again, Albert Einstein said that's the recipe, and that is the definition of insanity. So something needs to change, because you probably are not using the correct mechanism for the market. So this is what you're going to get with the course. And by the way, the link is going to provide everything. You get lifetime access to the Power Income course. You get the e-manual over 600 pages. You get unlimited retakes. You get 30 days to the futures trading room. And in fact, we have a special where you're going to get 90 days. So you have that link that is going to offer you 90 days. You have private X feed, you have the platform layout, you have student personal support, you have a risk sheet, you have everything. So basically, it's more than a $36,000 value for every $5,999. And literally, this is the only place you can ask the people in my trading room. This is the only place where you learn how to trade like a pro and earn trading with us every single day in the trading room. And if you want to start your trading journey with us today, and by the way, if you decide to enroll now, you don't have to wait until June. We will send you all the materials, all the on-demand materials. You're going to do it live with us in June, but we're going to send you all the materials to you. If you sign up today, you're going to get them tonight. And you're going to start tomorrow morning. You have instant access in the trading room. So those 90 days, okay, those 90 days start from June. But if you hop in now, you're going to get May for free and June for free, because the course is at the end of June. So you get 5 months in the trading room instead of just the 90 days. So it's crazy pants. It's almost like $16 a day. Now, those of you that say, hey, I'm not ready for the course, I just want to see how you trade, I have an offer for you. You can dive in the futures live trading room, which is $299 a month. The prices will go up, everything, all the prices are going up, right? How much would you pay? How much would you pay to have these kinds of results? This is a tracker per trade. This is a tracker per contract. Okay, this is a tracker per contract. This is January. This is per contract, not even position sized. Position size, you would get 2 or 3x more, maybe 5x more. $30,000 per contract. February. And by the way, these are hard months to trade. January. Look at your P&L. What is your P&L telling you? Telling about you? And by the way, all these results, all these trades, even if you see swings, they were called in the first hour of the day, in the power hour, period. That's it, done. I don't sit in front of the computer all day. I just day trade, done, 2 hours, I'm done. An hour, the power hour, okay? These are the results, 30,000. These are verifiable. They're from the trading room. I post them, I type them in myself in the room. I utter them in the room live, okay? I repeat the entries a gazillion times before it happens. You're not going to get this anywhere on the planet. Okay, so here's February results, right? Per contract. Per contract, you want to see March? Here's March, the most difficult month. Why? We had contract roll, we had the quadruple witch option expiration, we had the quarter, end of the quarter trading, one of the most difficult months to trade. Up. Are you guys ready to see April? April was hard. Everybody was complaining about the tariff. Boo-hoo-hoo. Ooh, the tariffs. I love the tariffs. Look at my results. Look at my results right here. The best month of the year. That's right. I'm embracing the market. I'm embracing the volatility because it offers me tons of trading opportunities. Tons of trading opportunities. Okay. So just want to share very quickly with you guys, this is where you go if you want to enroll. All right, this is the Power Income Futures Day Trading Masterclass. You have a lot of reading to do here. Okay, here it is, June 23rd to the 27th. The course date, 12:30 p.m., etc., etc., etc. Okay, and here we have the live trading room. If you want to sign up for the trading room, say, you know what, I want to just sign into the trading room. I don't want to learn how it's done. I just want to take your trades. Okay. Here it is. That's the trading room. This is my stat. And by the way, when you become a member of TradeOutLoud, when you sign up for the course and you sign up for the trading room, but for the monthly or for the yearly, not for the 5-day, you're going to get access to this. This is a tracker. This is a personal tracker. You're also going to get a risk calculator. And because you need to position size. You don't position size, you don't belong in my room, because you're not going to be successful. And I want only successful traders in my room. I want to develop successful traders. Okay, so you have to position size. So for example, if you have, let's say, a $50,000 account, oh, this is view only, I can't do it. Let's say you have a risk per trade of $2,000. And let's say we have, let's say 80-point stop in the Dow. All right, so you can see here, it shows you that you can take it with 5 contracts, right? And for example, if you have, let's say, I don't know, let's get something really crazy. Let's say in the S&P you have 100, let's say you have 50-point stop in ES, hypothetically. You can see that you are not going to take it with a full size, but you're going to go and take it with 8 micros, okay? So easy peasy. I do the work for you. When you sign up for the trading room, and also when you sign up for the enrollment into the class, you get my newest ebook, The Secret Language of Moving Averages. How many times have you been to a presentation where you had somebody say, if you buy my indicator, it's going to show you where to buy, where to sell, but it's going to cost you. So you're going to get an indicator that you're probably going to use for a month or two, and then you're going to throw it out. You delete it because it's garbage, right? Every single indicator that I have seen from traders, garbage. I would have loved to simplify my trading with an indicator that promises the world and delivers, right? But everything promises, over promises, like is selling the dream, and it under delivers, and you're deleting it after a month or 2 or 3, and you find out, oh my God, I just wasted 3 months of my life, right? All right, so you're going to get this. This is Mastering Symbol Indicators for High Odds Profit. And here we talk about moving averages, key moving averages that algorithms use. So you're going to get this for free, whether you sign up for the course or whether you sign up for the trading room. Okay, so not only this, but okay, yeah, okay, that's it. All right, so now I'm going to answer some questions. Sanjay, is it possible to look at the trading history on your website so that one can feel confident to see the performance has been the last 3 months? Oh, of course. You know what? How about I give you the performance since 2017? Okay, so you got to scroll down until you see view futures trading performance. Okay, so it's not a fluke. Okay, and you can see here 2017, 2018, 2019, 2020, 2021, 2022, 2023, 2024, 2025. And we're going to release the 2020 here, this one right here. We're going to release these numbers. We're going to make them public, obviously, after we wrap up the month. Okay. So I hope that answered your question. All right. Oh, thanks, Eric. I appreciate it. I so appreciate it. Oh my gosh. Thank you. I appreciate it, Eric. Thanks so much. Oh my gosh, Charles, thank you. I appreciate that, because there are so many scammers out there. Trust me. It's hard to know who's legit and who's not. Who's legit and who's not. Okay. I really appreciate it. Thank you so much, guys, for being here tonight in the room. You know, bringing some information for new members that are in here. So I really appreciate you guys. If you have any other questions, feel free to email me at info@tradeoutlloud.com. I always love to answer questions. So feel free to do that. Remember, we have the trading room open, and we have just opened the room, opened the doors to our 90-day power income course. And very happy to see you guys. Sanjay, any chance we'll be running $500 off? We only do that once a year, Sanjay. We only do that once a year. But stick around. Stick around. I don't know. We usually do that in I think it's in January, or I have to ask Alyssa. She's our, yeah, you missed it last time. Yeah. All right. So this is it for tonight, guys. Hope you guys are going to have a great night. And I hope this is useful information. Watch those earnings, because that is all about. These 2 weeks are going to be super hot, and you're going to have a lot of opportunities. That's why I decided to do the webinar tonight. So you can take advantage of what's coming up tomorrow. Tomorrow night, especially with Microsoft, Meta, and Qualcomm, and Thursday night with Amazon and Apple. These are the biggest power players that we have this week. Thank you so much, Kay. Thank you. I so appreciate it, guys. I hope to see you in the trading room, and I hope this workshop was educational. And I'm really excited about being tomorrow in the trading room. We have Visa to take care of, and Caterpillar. Okay. Thanks so much, guys. Have a great night, everybody.